Could we be in a rolling recession? Here's what you need to know before the bell. This past Friday, while doing an interview with Charles Payne on Fox Business, Liz Ann Sonders was just before me and brought up a very interesting idea about the markets and why the markets have been so resilient to just the plethora of bad news that has been coming across the headlines as of late. And that's the idea that instead of having a recession where kind of the bottom falls out of everything, what if instead we're in more of a rolling recession? And that was kind of an interesting idea because if we take a look back at the market over the last year or so, it really kind of gives you this idea of what she's talking about. First of all, we had this big run up in the markets to the peak of the market in 2022. And of course, that was where we first got into the war with Russia and Ukraine. Markets started to kind of come down with this idea that, well, we kind of gotten a bit ahead of ourselves during the 2021 rally. We were starting to see some kind of impact, in the financial markets. A lot of these tech stocks have gotten way ahead of themselves, particularly non-profitable tech. So we had this initial invasion of Ukraine and the markets rallied back from that a bit. And then as the markets kind of started adopting this idea, we went through this period of really kind of focusing on non-profitable tech. And that was this whole first decline that we were going through. Non-profitable tech was really kind of under the big pressure. Got through that phase, markets kind of rallied back here a bit, and then we got into worrying about, well, now the issue is IPOs and SPACs and all of these easy money acquisition vehicles that we put out into the markets. And then, of course, as we got into the end part of last year, we started talking about the real estate issues, housing prices now coming down, those type of issues. Markets started to really kind of process a lot of this in as we were kind of taking these kind of one hit after another. The market was on this decline. Since then, of course, we've gotten into 2023 and we had a rally coming off this, of course, got into the whole issue over the SVB, Silicon Valley Bank banking crisis, First Republic, have been able to absorb that as well. And this is the important idea that, this kind of rolling recession idea is that the market is taking these hits kind of repeatedly, one after another. And as we start looking back at the market, particularly over a longer term time frame, we can kind of see a better picture of this actually happening. Of course, as we were entering into 2020, we had the pandemic sell-off in the markets. Of course, that was where the Fed intervened with $120 billion a month in QE, had $5 trillion worth of stimulus, and this led to this massive surge in the equity markets because of all this liquidity hitting the markets. And so, yes, while the market has pulled back here over the course of the last year or so, really we've not done much to alleviate a lot of this major advance that we saw in the last part of the year. So in fact, if we had actually kind of look at the market and extract out what the market's taking out, well, really, the markets have done nothing more than just kind of rally following a post-big sell-off. We had a 35% decline. The markets kind of rallied back, and if we just kind of strip out what the market really kind of overran, right? The markets kind of rallied too much because of all this stimulus and speculation and FOMO. We've pulled that out of the markets, and so we're now back to a level that was probably consistent with a longer term trend of the markets overall. So again, this idea that a rolling recession has pulled out some of this froth may have some merit to it and kind of alleviates some of that idea of a recession. And we have this big major pullback in the markets because really markets are returning back to their longer term bullish trend, something that we'll probably be talking a little bit about more over the next few months, particularly as we get through earnings season. Again, it's not a declaration that is exactly what has happened, but it is an interesting aspect to think about when you start thinking about the impact of how markets accommodate and absorb bad news as it comes. We often talk about the markets climbing a wall of worry. The market's been able to adjust and absorb for a lot of this bad news because it's been spread out. It didn't happen all at once. I'm your host, Lance Roberts, and that's what you need to know before the bell.